Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. Stocks that are on the aggressive growth track. That's what we're going to be talking about with Bill Wilton. Bill is our aggressive growth stock analyst at Zacks.com. He's brought another couple of good examples of some aggressive growth stocks with him. First off, Immucor, BLUD, the ticker symbol. This company's posting records.
Yeah, they are. They've just announced record revenue and net income in their last quarter. And what they do is they develop and sell a lot of products for blood transfusions. So that is something that's not going to go away no matter what you're doing.
Right.
They make units for blood labs, hospitals, independent clinics, all sorts of different organizations, blood donation centers. They do the typing, diagnostics, and things like that on the blood. So it's always going to be in demand and always going to be increasing. They just posted their third consecutive earnings surprise, 28 cents a share versus the street was expecting about 23 cents. So that was fantastic for them.
So no reason to believe that going into the new year they're not going to continue their record-setting ways.
Absolutely. They're still projecting excellent growth rates into next year and beyond. Like we said, it's something that's not going to go anywhere, and the company is just starting to turn the corner. So things should be very good for them on into the future. They've actually recently acquired BioArray Solutions, which is another diagnostic company, for about $108 million. So they're expanding organically and also acquiring other companies. So.
And that's important, too, when you expand both ways like that.
Absolutely.
It leads to more solid growth.
Once you stop expanding organically, then it's hard to consider you a growth company anymore. You're just buying growth rates from other companies.
Right.
So it's great that they're able to do both.
Maintaining some good valuations in the process.
Absolutely. And one of the nice things that allows them to do that is they've got a great level of support here at about $22. When they're near those levels, not only are they an excellent growth story, but you can get them for a pretty good value there.
All right. Next one that we're going to talk about is EZCORP, right? That's how it's pronounced?
Correct.
EZPW, the ticker symbol, on the NASDAQ. Analysts look like they like this stock across the board.
Yeah, and one of the interesting stories about this is it's a great, tough economic play. So what they do is they establish and operate pawn shops. So they do a lot of consignment loans.
Well, that explains why they're doing well.
Exactly.
Given in this economy that we're in.
You'd be surprised the neighborhoods where pawn shops are booming. There's stories of people selling fur coats in Beverly Hills just to make the monthly payments. And, they're able to capitalize on people's hardships, if you want to call it that, but they're providing them a service that they need.
Do they even call them pawn shops anymore?
I think they steer away from that.
The name, I think they've given them a different name, although I'm not sure what that name is at
this
point.
Signature loans, consignment, whatever you want to call it. But
antique shops. No,
yeah, they're good old-fashioned pawn shops. So they do loans based on a pawn-type loan where you would make a loan using collateral that the person would bring in. If they repay it, they get their stuff back. Or they also do signature loans where they just have a fee associated to that. So they do both.
Or they can just buy it from you and sell it outright, right?
Yeah, but they do more of the loaning type process. Most of the stuff they're selling is they've received it from someone defaulting on their loan.
So taking a page from the payday loan companies and kind of putting a different twist on it.
Yeah. And they're actually expanding pretty rapidly. They're planning on adding up to 70 stores between the United States and Mexico over the next year or so. And they've got about 31% year-over-year growth in their last quarterly announcement. So
interesting.
And again, they are projecting great growth rates, as you can see here, just over 24% next year and another 15 to 16% into 2010. But as you might imagine, it's kind of a high-risk play. You can see by the chart that their stock is a bit volatile because it's a tricky industry. This channel that I've drawn out here is about 20% wide using that bottom trend line. So if you are going to play this one, make sure you get in toward the bottom of that channel, and you should do all right as long as they keep setting higher highs.
So just because the economy is what it is, doesn't stand to reason that stocks like this are going to just skyrocket indefinitely.
Absolutely. They could really do anything. It's very difficult to say. I mean, the credit crisis is what we're in, and this is still another form of credit.
Right.
So there's no doubt that they could have a bunch of bad loans on their hands, or more loans than they thought would go bad. Or things could work out well for them, business could boom. It's a very aggressive growth play.
Right. Do you or does anyone in your household own either of these two stocks?
No.
All right. Bill has written about other aggressive growth stocks in the recent past as well. We invite you to go to Zacks.com, our homepage, especially if you're accessing this video from outside of Zacks.com. And over to the upper right-hand corner of Zacks.com's homepage, you'll see all of the Zacks Rank Buy categories, investing categories. We call them the different investing styles. All you do is go to the aggressive growth style, you click on the most recent headline, and it'll take you right to the text versions of these pieces on the stocks that Bill has been talking with me about today. With Bill Wilton, I'm Terry Ruffalo.